Hey everybody, Gary with Basecamp Trading. Let's take a look at the ES futures. Short was definitely the direction of the day today, and we were on the right side of the market today. And here's a tool that can help you. You know, if you trade with us in the afternoon and in the mornings, you know that for the most part, we're on the right side of the market extremely consistently. And this is our 30-minute chart. And you can see this is our opening bar right here. This was actually a bear flag. You can't see that. But here, let's take that bar off now. You can see we actually had a bear flag right there. That bear flag triggered, price pushed down, found support at the 200. We know the 50 and the 200 are often significant support resistance or significant support and resistance lines. 5 and 13 had already crossed to the downside in the London session, and we were pushing down. This was our opening bell bar, pushed up, left the topping tail, set up the bear flag. The bear flag triggered, found some support at the 200, and then we continued down, pushed down, left the bottoming tail, set up another 30-minute bear flag, and made a nice push down and a really strong hard push down from there. Got really extended. You can see we were significantly undervalued on the 30-minute, 2 bars in a row right here. So we had gotten extended, made the pullback, actually triggered a continuation doji back to the upside. We're able to actually grab a long trade off of that. Ran up to the 13 EMA, found resistance, and then big bearish bar back to the downside. But you can see, looking at this chart, 5 and 13 crossed to the downside. Price moved under the cloud, under support, and the short side was the side to be trading on. If you're on the right side of the 5 and 13 cross, for the most part, you're on the right side of the market. Are there transitions? Yeah, we got extended. You get pullbacks. And of course, nothing goes straight down or straight up. So there's going to be some transition periods. But today, the short side was definitely the direction of the day. Your short trades were the ones that were working out well, which was just the opposite of yesterday. Let's take a look at yesterday. This was our opening bar right here yesterday. You see we pushed up, 5 and 13 crossed to the upside. Price moved above resistance. And yesterday, the long side was the side to be on. If you were trying to take shorts yesterday, you weren't doing real well. The 5 and 13 were crossed to the upside, positive momentum. And yesterday, the long side was the side to be on. Let's look at another day. See, the day before, price had been pushing down. 5 and 13 were to the downside. The initial bell price pushed down. And then here's the transition period. We had a bottoming tail, big bullish bar back to the upside. You left the reversal doji. 5 and 13 were still crossed to the downside. So the short side gave you some nice trades there. Then you had this really big low high reversal bar. That bar opened here, little tail, and then entire body was all buying, closed above resistance, had the continuation doji triggered to the upside, and then the 5 and 13 crossed to the upside, and the rest of the day, long was the side of the market to be on. And again, you have this transition, early, short was the side to be on. You transition, the rest of the day, long was the side to be on. So again, you don't necessarily have to be in the same direction for the whole day. You may have a transition period during the day, but we can look at this chart and know, for the most part, which side of the market we should be trading on and which side of the market is going to give us our highest probabilities of success. Let's look at another day. Same here. This was our opening bell. We pushed up. Price kind of fluctuated a little bit. 5 and 13 crossed to the upside. And then look, long was the side to be on for the rest of the day. The day ended right here. But long was the side to be on. If you're trying to take short trades, once the 513 crossed to the upside, short trades weren't working out all that great. The long side of the market was definitely the side of the market to be on. And this helped keep us on the right side of the market. During transition periods, we may miss some trades, or we can take some short time frame setups, but we know that those trades are potentially a little iffier. Where on the other hand, when we're on the right side of everything, we know that the probabilities of our trades working out increase significantly. Are every single one of them a winner? No, absolutely not. Absolutely not. But we do know that our probabilities increase when we're on the right side of the market. Let's look at another day. Do we have another one? I guess that was it for this week. But so anyhow, as you can see, we have some tools that help keep us on the right side of the market. It's important when you're trading to take the highest probability trades, and this is a really simple, very effective tool that we use every single day when we're trading to help keep us on the right side of the market, which helps increase our probabilities.